Hey guys, welcome to my channel. In today's video, we will learn about backflush costing, and the topics that I will cover in this video is meaning, conditions, process, examples, and we are going to learn the entire thing with the help of the journal entries. So let's begin with, before I tell you the meaning of backflush costing, you need to understand the difference. See, in traditional costing, what do? Whenever we incur any expense, the company incur any expense, say on the production of any product or service, we record it in the books of accounts, right? We immediately do so. For example, supposedly I have to make a pen. For pen, we need so much of raw material, we need labor, and then we need overhead expenses. So whenever I'm going to purchase the raw material, I will record it into my books. And whenever there are any overheads, say labor overheads, I pay wages, so I'm going to record it in my books. But in backflush accounting, what do? I complete my process. Say I have produced all the pens, and then I do the journal entries. Why do I do so? Because it is very difficult to ascertain the number of, say, raw material acquired or the labor given, or say the finished good produced. So it is very difficult to ascertain differently. That is why we use the backflush costing. So let's understand the meaning of backflush costing. See, backflush costing is an accounting method that records cost after the goods is sold or the services has been completed. So once you have completed the entire process, right, then only you record it in your books of accounts. See, backflush costing is common among the companies that use just-in-time inventory management system. So what is this? Whenever the inventory is needed in the company, then only it gives the order. Okay, so whenever the order is being placed, the inventory immediately gets delivered to the company, right? That means whenever the inventory is needed, then only the order is being placed and immediately I receive my order. So in just in time, what happens is my carrying cost is reduced to zero. I do not have to keep my inventory in my storage. No insurance is being done. So carrying cost comes to zero. This reduces my carrying cost, right? Now next we can see that it avoids costly and complicated reporting of all the expenses as they occur. Instead, once the process has been completed, it flushes back all the expenses in the single entry. Right? We are going to understand this with the help of the example as well. Okay, so the conditions for backflush costing is, first condition is that management wants simple accounting system, right? In backflush accounting, what do? Once the process has been completed, then only we record the entries, right? Instead of at every point of time we keep on recording, we just record it at once or after the completion of the product or services, right? And we also see that for each product, budgeted or standard cost have been set. We will see this, the standard cost, with the help of an example as well. Then material inventory level is either low or constant. We've already seen that backflush costing is relevant when JIT, that is just in time approach, is needed. So in that just in time, the inventory is either very low or constant, right? Okay, now we'll see how it works, the process of backflush costing. We'll see that. Now, what does companies do? Company produces the goods or services. Okay, once the entire process has been done, we ascertain the number of units that has been produced. We multiply it with the standard cost. We set the standard cost of each and every product once it has been manufactured and then multiply it with the number of units, right? Once this has been done, we do the journal entries at the end of the production cycle. Now here I have taken one of the examples of ABC Limited that produces burgers. Okay, it has got the order of 100 burgers. So if we do the traditional costing, here it is very difficult to ascertain the cost, because for making the burgers, bread is needed, vegetable is needed, cheese is needed, mayonnaise is needed, and other inventories are also needed. So it's very difficult that how much cost it will incur for all such things. Okay. So what does it do? Instead of traditional costing, it goes for the backflush costing. Okay, it produces with the estimation 100 burgers. okay, it orders the inventories with the estimation for 100 burgers, and 100 burgers are being produced, and whatever is the final cost, it multiplies it with the number of output, that is the 100. Okay, whatever is the standard cost, it multiplies it with the standard cost. I hope you've understood till here. Okay, then comes the advantages and disadvantages, right? So you guys can note down the advantages. What are the advantages? Less entries are being passed, right? In comparison to the traditional costing, it is less costly, obviously, because we do not want to keep all the inventory is not needed, and the cost of holding the inventory is also very low, right? And what can be the disadvantages? First disadvantage, the big disadvantage, is that we need to have the standard cost. It should be reliably estimated, right? For every product, I told you the final cost, that is the standard cost of each and every product or services, need to be certain reliably. Then cost accounts may be difficult to reconcile with the financial accounts, right? Then we have various variants for the Backflush costing. Okay, in this we have the trigger points. Now what are the trigger points? We have different stages, right? From production to the final sales, we have different stages, right? So at how many stages and when we have to record is known as the trigger point. Supposedly, I have to record in my books only after the sales of goods and services. Then I will have only one trigger point. Supposedly, I have to make journal entries while purchasing the raw material and at the final sale. Then I will have two trigger points. And when I have to record my entries in, say, 3 stages. Supposedly, first stage is when I purchase my raw material. Second is my conversion cost, and lastly is my sales of goods and services. So over here I'll be having 3 trigger points. So what is a trigger point? That is simply when you record in your books of accounts, okay, through the entire process. So I've taken one of the examples for Backflush costing over here. See, for XYZ Limited, okay, the expenses are given in terms of, say, purchase of raw material, labor and overheads, right? So these are the expenses, and then we can see the final production. Over here, finished goods manufactured is 180, sales is 145, and standard cost that was set per unit is for material 20, labor is 15, and overhead it is 9, and total is 44. All right. Now let's see how we solve this and how do we pass the journal entries. First is the purchase of raw material, that is 4,250. So RIP, what does this mean? RIP, raw and in process, right? Raw in process. Why? Because raw material, we do not have any inventory in ourselves. So that is why immediately we purchase the raw material and we've sent to the in process. That is why it is RIP, account debit to creditors. We've purchased. Okay, then CC over here is the conversion cost. Conversion cost, what do we have taken? We have taken labor and overhead. See, in the question it was given labor and overheads. Okay, this is our conversion cost. Then we have is the finished account. Finished good account we have taken. Okay, over here see that how many goods we have produced? We have produced 180 units, right? Into the total cost, standard cost, that is 44. Okay, 180, that was the number of units produced, into standard cost that was set. And what do we credit over here? RIP, that is raw in process. 180 into material. See, material, what is the standard cost for material? 20. 20 is the material cost, and labor cost is 15, and then overhead cost is 9, right? So what have we done? We have credited both the conversion and the raw in process, right? So whatever has been produced, we assume that it has been sold. That is why, how many units were sold over here in the question? See, in the question, how many units were sold? 145. Nothing has been given. So simply what do we do? COGS, that is cost of goods sold, over here into standard cost, that was 44. and the credit is your finished goods, right? We credit the finished goods. Then what have we done is we have prepared the ledgers of all the accounts. You guys can prepare the ledgers yourself. See, the balancing figure over here in raw and in process is 620, right? We've taken this balancing figure. Another balancing figure that we will take is of the finished goods, that is 1540. So what is this? This is your stock balance at the end of the period, right? So this is the stock balance at the end of the period. So that is it for today, guys. I hope you've enjoyed and learned something. If yes, then please like, share and subscribe to my channel. And in case of any query, please comment in the comment section your queries and I will surely reply to it. Thank you and have a nice day.